Everybody wants to invest in stocks. Some people don't even know what that entails, and some people just don't know where to start. So in this video, I'll give you the top 6 things you must consider before buying your first stock. So when I became interested in investing, I didn't just go out and buy Apple or Tesla or Amazon. I told myself that I would dedicate at least 1 month to understanding it all first. I read books, articles, I watched YouTube videos, I talked to people in my network that I knew had experience with investing just so I can get an understanding of what I was getting into. Stock investing is not a get-rich-quick scheme that requires no education. This is something that you must devote time to learning and understanding if you actually want to succeed. So I'll link some good educational resources in the description, but my favorites are Khan Academy's Finance and Capital Markets video series and always Investopedia for any general definitions that I may need. Now, I really and truly believe this is the most important prerequisite. Everybody wants to invest in the stock market until you have to actually invest in the stock market. An important question you should ask yourself is, are you willing to understand the nature of free markets and patient enough to invest with a long-term mindset? A month after I started investing, I invested in a stock and lost $1,000 in value an hour later. My girlfriend's a witness. Now, did I cry about it? Well, it depends on which witness you ask. But regardless, the next day, I was right back at it, understanding what went wrong and looking for another investment opportunity. Stock market investing has its inherent risks. Therefore, you should define your appetite for risks, given your personal circumstances. Here's the general rule of thumb. Let's say you have $2,000 saved up for a trip in 12 months. You want to make that money work for you a little bit, earn some interest, whatever. Let's say the stock market loses 30% in that time period. If you had invested in the stock market, you would lose $600 after this 12 months and now not have enough money to pay for your trip. So in this case, you would want to invest in a less riskier investment, such as a high interest savings account. On the other hand, let's say you had $50,000 that you were going to put aside to help pay for your daughter Susie's college tuition. So you won't need that money for 18 years. So if the market drops 30% tomorrow, there's nothing to, there's no problem. You have 17 years to recover from that. Because remember this, you only lose money if you buy a stock at a price and sell that stock for a lower price. So if you haven't sold the stock and the stock is trading at 10% lower than it was when you initially bought it, you haven't actually lost anything yet. So to conclude the point, your circumstances and general appetite for risk will determine whether you're investing in stocks or more risk-averse investments like US Treasuries, bonds, savings accounts, or money market and diversified mutual funds. You won't be the next Warren Buffett in 30 days, or even a year. So don't drag it and try to come up with this optimal portfolio that will beat the market every year. Start with one share of one company. As you gain more confidence, you will start to invest more money in more companies. A stock's price is not the only factor that determines if it's cheap or not. I've had numerous people reach out to me and ask me what penny stocks should they buy. The reason that they are asking me about penny stocks is because they think that penny stocks are cheap, and therefore if you buy the stocks with the lowest share price, you'll make the most money. And that's just so wrong. Netflix went from $150 a share to $275 a share in almost a year. And similarly, Amazon went from $1,000 a share to $1,600 a share. 2 expensive stocks that could have almost doubled your money in the course of a year. So before you waste your time doing this whole Wolf of Wall Street thing, remove this quick money mentality approach and seek to find good, long-term investment opportunities regardless of the share price. To start, I recommend using the Robinhood app. And if you use the link that I provide in the description to sign up, you and I will both get a free stock. So help me, help you, help me. But anyway, Robinhood allows you to buy and sell stocks, mutual funds, and index funds for free. And since you just be starting, you don't need all the charting and tools that like E-Trade and TD Ameritrade have to offer. And that is why I'm recommending this app. To supplement this, you will need a source of information and opinions on your investments. I recommend that you use Seeking Alpha for more opinionated content and Bloomberg Finance for financial news and data. This is also very key to your success as an investor. Find a group of people who are also interested in investing and start a little investing group. You'll learn a lot more in a group setting than by yourself. Make stock pitches to each other and share any general investing opinions that you may have. Class will always be in session when it comes to stock investing, so grab a friend and get ready for the never-ending ride. Shout out to you for watching the video up until this point. Stock investing is not for everybody, and thus it is very important to determine if this is really something you are willing to do. If not, that's completely fine. Just stay tuned for future videos on investment opportunities that are less time-consuming and complex as stock investing. Otherwise, let me know in the comments below if this video has allowed you to start your journey towards stock investing, or if there are still things that you are unclear about and would like to know before you dive in. There will always be questions about the current state of the markets, so feel free to reach out whenever you have any questions. See y'all in the next video. Broke is a mentality.